Good afternoon, everybody from Nairobi, and welcome to our EGM Securities Update. Today we were just going to touch on the tradable instruments at EGM. Lawrence is going to tell us all about that. You said there are four categories of asset classes.
There are four categories, yeah.
What are those four?
So if you look at the market watch here,
This is that, right?
This is the market watch,
yes.
Here. So if you scroll to the bottom there, you get to see all the tradable assets, but they're in four categories. So we have currencies, which is the most obviously famous. Then we have precious metals like gold, palladium, platinum, and copper. Then we have indices.
Equity indices.
Yes. Indices like the S&P 500, the Nasdaq. We've touched on Nasdaq quite often. Then we have commodities, natural commodities like oil, natural gas. Yeah, so we have that.
Today you were going to talk a bit about the currency market.
Yeah, so the currency market.
Yeah.
So you see it here. So if I just scroll here, you're going to see the pound USD. So they are all mixed up, they're all bundled up. So it's upon the individual obviously to kind of know what currency is looking at. So currencies we have, we have the majors. Those are the 7 most tradable currencies. So we have like the New Zealand USD, the Euro USD, the Pound USD, the Aussie USD, and the Euro USD. The Euro is the most, and also the USD JPY. So those are the majors. Then we have, obvious pairings between maybe the Australian economy. So any other currency other than that is called the minor. So that's a minor currency. Now, then we also have the exotics. Like, for example, here we have the USD rand against the rand. That's an emerging market or an exotic currency. So the one thing about you need to learn is you have to click on it and then you kind of right click on it. Then you're going to have the specification. So for currencies, the specification is the same. It's very standard, but you're going to, obviously when you talk about indices, it's going to change. So the first thing that you notice here is the contract size. It's 100,000. So when I come here and I buy one lot here, it means 100,000 contracts. So that's 100,000 contracts. So if I buy, if I want to buy 10,000 contracts, I'll have to change this to 0.1. Obviously, it's a simple calculation. So the minimum you can do is 0.01 on this. So you just come here and do 0.
So that's the minimum a client can do with you?
Yes.
Yeah.
0.01. See, so if I just come here and I add 1. So that's 0.01. That's the minimum you can do.
Okay.
That's 1,000.
Yes.
1,000, yeah. 1,000 maybe pounds or euros. And then you're going to see the margin reflected there. So that's currencies, yeah.
Great.
If you're looking at currencies, you're going to want to look at fundamental news from the economic calendar in terms of what is coming out. In which zone are they trading in? Are they from the New York session, or are they from the London session, or are they from the Asian session? You also need to know things like interest rates, and also political events that are happening. Are there any elections coming up? Stuff like that. That is what moves the currencies.
And we've seen big movements, politically related. We've spoken about that.
Yes,
the
exactly.
Brexit issue, the tariff war.
Exactly.
And there's a lot going on today in the currency market.
Exactly.
So you've got to keep your wits about you as well.
Yeah. The reason why currencies are so popular is because they affect trade.
Yes.
And they affect everyone. Doesn't matter if you're trading FX or not. An exchange rate is going to affect you either way. So you see that translate also in the markets.
Fantastic. Yeah. Thank you. We look forward to the second session.
Okay. Tomorrow we do commodities.
Super.
Okay.
Thank you.
Okay. Awesome.